We are live, ladies and gentlemen of the internets. Welcome to the Beacon Roundtable. This is from Beacon. Here's the four co-founders. Got Chris, Gabe, Andrew, Jangle. We represent a community of online market makers. And we're here to talk about the news of the week, the big things in on-chain finance, decentralized finance, and crypto. How is everybody doing this week? What a crazy start to the week it was, guys, with this fake news about BlackRock's iShares Bitcoin fund actually being approved when it clearly wasn't. Kind of set the market into a tizzy, liquidated a bunch of shorts.
Yeah, that was an interesting couple of hours.
Yeah, we love a little market manipulation.
A little bit. We sure do. That was 10 minutes of my life that, some people are never going to get back.
I'm bullish. Joke. I don't love market manipulation. I think it's a whack.
Whack.
Yeah, did anybody trade on this? I did not. I saw so I have a VPN, obviously, because I'm not a degenerate. And I block like Twitter and YouTube and Instagram and the news and CoinGecko like programmatically for the first half of the day, because I try to do stuff that matters, and I find that Twitter interferes with doing anything of substance. So I do have the stock app on my iPhone where I can see the S&P 500 and Bitcoin and ETH mainly. Just like if I scroll all the way back to the end of my homepage or whatever. And I saw that, Bitcoin was up 10% and ETH was up 7 or 8%. And, Coinbase, everything was just ripping. Right. And so I quickly checked Discord and I realized that there had been some fake news about, at the time we weren't sure if it was fake news, but then as I was checking to figure out what happened, everything just, immediately retraced the vast majority of the pump. I wonder, is there anything that surprised you about that moment, right? Because it's kind of like we got to dry run what the pump of an ETF approval will look like before it actually happened. So it was was there any insights or shocking things that didn't pump as hard as you thought they would, or things that pumped harder than you thought they would?
I think pretty much as expected. Bitcoin leading the charge. Obviously, it's the Bitcoin ETF that we're talking about. But yeah, I mean, if this happens once or twice more, maybe when the real one comes, we'll see a bit more of a regulated response, or not as crazy. 10% on Bitcoin within a couple of minutes is kind of crazy.
A little bit. Yeah, it definitely got my attention.
The market's ready. The market is ready.
Yeah, we're a bit bored, aren't we?
Did you see Larry Fink call Bitcoin a flight to quality as well?
Did he?
Yeah. On CNBC the day of the pump, he's like, it's the market craves quality or something like that. The Bitcoin is a flight to quality, something along those lines.
I mean, compared to the dollar, I'll agree to that.
Yeah, I mean, he's right, but I just to come out and say it, holy cow.
He's been saying it similar things for a while now.
I know. I mean, since really this year, I feel like he wasn't saying that very much in 2021, certainly, or 2022.
Yeah, the last 6 months, really.
Yeah.
And I mean, he is managing the largest asset management firm in the world, so.
Yeah, another thing that I think he's probably if I was Larry Fink, if I was Vanguard or BlackRock, obviously Fidelity's kind of ahead of the game with it. There's a massive amount of boomer wealth, right? I think the average, I'm pulling this number out of a far-reaching memory, but I think the average net worth of an American boomer is somewhere around 1.2 million, including their primary residence. And so, a massive amount of wealth is concentrated in, 50-year-old and above in the United States. And with an aging population, I think the boomers probably still got some time with us. But eventually, over the coming decades, the kids, the millennials, are going to be inheriting this wealth. And, something like $30 trillion is managed by wealth managers, right? So that's not necessarily just asset managers like the big boys like BlackRock and Fidelity, but I'm talking like family offices and just, wealth managers and people who are advisors and who are optimizing the tax efficiency and the portfolio structure of the boomers, right? And other generations, but predominantly the wealth is in the hands of the boomers. And so I think that crypto skews disproportionately young, right? Not to say that you have to be young to be in crypto. You definitely do not. It is totally open to everybody. But the reality is most people, I think, in crypto are below 35, right? And so I think that there's going to be a lot of people inheriting a lot of wealth over the next 10, 20, 30 years. And, it's not unreasonable to think that 0.5% of that or 1% of that, $30 trillion that's under the purview of active managers currently, finds its way into a flight to quality, right? Why buy a 20-year US shitcoin bond when you could, have ultrasound money or that orange coin, that sweet, sweet orange coin? So,
or a CSGO skin.
Yeah, or a factory new hyper beast for your CS:GO M4, which, by the way, CS2 is out. I haven't even played it yet. Am I bad? Am I bad for that? It's too busy.
Just before we get any angry comments, that's the average wealth of a boomer. Median number is way lower. Obviously, it's concentrated.
Oh, I actually don't know if it's average or median because
no, that sounds like the average. Yeah.
Okay.
Median is closer to like 150K. I think it's much lower.
Really?
Yeah.
Wow. Okay. Yeah. That makes sense. I think I did say average. I also did preface it by saying I pulling this out of the back of my brain a long time ago. I heard this statistic, so I could be wrong. Definitely fact check me on that. But the point, I think, stands that there is a lot of wealth concentrated in older American generations. And older Americans are currently not allocated very much at all, generally speaking. Like, these are all generalizations to crypto. So if you're an asset manager, if you're Fidelity, if you're BlackRock, if you're Vanguard, or if you're a smaller asset manager, a family office or whatever, then you're kind of looking at this emerging asset class as either a potential differentiator. So it's like, hey, we have competency in this, or hey, we have really good structured products for this. Hey, like, we know how to put this in your portfolio in a way that, we can manage the volatility of it and still capture the upside, right? Like, if you bring that to the table to the millennials that are maybe the Gen Z that are going to be inheriting this massive amount of wealth over the next 10, 20, 30 years, like, that's probably how you future-proof your business. So I think that's why we're starting to see people go from, like, the people who were like 3 years ago, like, it's rat poison, it's, it's all scams and grift, to now, like, it's a flight to quality, right? They need to start messaging that to associate their brand with it so that they don't, get just smoked by this stuff in the coming decades.
A flight to quality.
I think it's worth just realizing that we've gotten as far as we can without Gen Z, because Gen Z is broke. The possibility of giving some, some passing down some cash to Gen Z. It's an interesting scenario.
Too much avocado toast.
Yeah, they just don't know how to work themselves through college like their parents.
That's it.
Back in that day, you could graduate from college, no debt. It's just a work ethic issue.
I don't think it's a work ethic issue. I think it's a federal student loan program issue. I think that we've been giving unsecured, non-bankruptable lines of credit to people without fully developed frontal lobes.
I'm memeing.
Yeah, we are memeing. I just want to clarify.
I'm not. I'm not. I think
No, I
Gen
know,
Z
I know,
was
but
totally
when we're saying
wrecked by the availability of massive amounts of non-bankruptable unsecured debt. Like I think that totally screwed a lot of Gen Z over, but it's all good. Hey, that's bad, even if it's for
I saw an,
college.
saw an interesting statistic the other day. Did you know there's actually like less than 2.5 trillion US dollars, physical US dollars. The rest is just digital.
In circulation?
Yeah.
Wow.
Well, there's also like it's also hard to account for all the physical dollars in circulation because like the majority of them are not inside of the United States. And even if they were inside the United States, how do you account for it, right? Like, how do you know?
Well, yeah, but surely they know how much they printed. They must keep track of that to some degree. And obviously some currency is destroyed and
Yeah.
things
Well,
like that.
this is why we have Where's George. Did anyone ever do Where's George, where you like track the serial numbers on dollar bills on the where'sgeorge.com website? Did anyone do that?
No, my mind immediately went to Where's Waldo.
Ah, fair enough.
Same. I have seen people deface the dollar, the currency though, with the Where's George thing.
Correct. But
It's a really interesting guerrilla marketing tactic if it isn't just, so darn illegal. You just put your advertisements on the money.
true.
Isn't that a federal crime?
Yeah.
Is it really to write on a dollar bill?
I think so,
Yeah.
yeah.
I think so.
I mean,
Don't tell us whether you have or not, Chris.
Don't admit to any federal crime.
I'm all looking. I don't carry cash anymore.
Yo, you gotta carry cash. I use cash whenever possible because I'm trying to keep it from being phased out. That's my contribution to liberty. That's my freedom fighting is using physical cash.
Fair enough.
Unless I'm at the gas station because I get 4% cash back and like 4%.
I was about to say, I was like,
2%, 2%, screw 2%. 4%, like
that's where it's at.
That's not nothing.
That's not.
Do you use hundreds to cause a problem if they don't have a 50 for change?
No, 20s are typically, what I get at the ATM. It's just what the ATM wants to dispense to me, and it's a good middle ground. It's
I was just wondering if you were like the kind of guy that actually goes into the bank to get $100 bills so that you can give people crap for not having a 50 for change.
No, there's a drive-through ATM that I use.
I usually go Amex for the cash back if I can.
Fair enough.
What's your cash back looking like, Gabe? You get 2%, 1%, depends on the category.
It depends. I think larger purchases you can get higher on, but generally around 2%, between 1 and 2.
I've got one card that's 4% on gas and 3% at grocery stores. So I do gas and groceries.
Pretty good.
And then I've got another one that's 2% on everything.
Do you use a decentralized card for that, like Spritz or something like that?
No.
Fair enough.
I'm not trying to spend my crypto. Are you crazy? I'm trying to spend this filthy fiat.
Well, what do you, if you had to spend money on your crypto money on something, what would it be? Would it be like a Lambo?
It'd probably be ETH. I'd probably buy ETH with it. Is that possible?
How about you, Gabe? What would you buy?
Well, you can't buy ETH with ETH. I thought pretty much all your crypto is ETH already.
Yeah.
No, you can definitely buy ETH with ETH. It's called leverage, boys.
I'd probably buy a liquid stake token. That's what I'd buy. I'd buy some liquid stake ETH. Most likely.
But you, Andrew?
Maybe Bitcoin if I had to.
If I had to spend my crypto on something, what would it be?
Yeah.
Whatever is most useful for the transition you're trying to pull off here.
Damn it.
I would buy a Lambo.
Play along. You would buy a Lambo.
Of course.
Well, that would be fantastic if you could. But
preferably like Doge wrapped or something.
Oh, that's the McLaren.
Custom paint job. Some Doge on there.
Some wrap job. Well, you can't quite buy a Lambo, but what you can't buy is a Ferrari. As Ferrari is now
Hey, this actually makes sense. This makes sense.
Doesn't it though? Does it not? It's like all these people are like, when Lambo? I'm like, but what about a Ferrari? A supercar is a supercar, right? But what the funny, interesting part is that it was driven by market demand. So I'm trying to figure out How many people wrote to Ferrari and were like, you know what? I would buy from you if you accepted Bitcoin, if you accepted ETH.
Like
Just as
5
a-
guys, but 50 times.
Exactly.
Each.
Exactly. So whoever did the guerrilla campaign, the grassroots swell to get there, good on you. It's available only to U.S. residents right now. They're moving to the EU in 2024, and they're using BitPay as the payment processor, which means you can pay with Bitcoin, ETH, or USDC.
Boom.
Boom. Right there. No tether. No
Bullish.
tether for you.
The only 3 crypto assets I want in this world.
Hmm.
Bitcoin, ETH, and those crypto dollars.
Exactly. With no fees and surcharges even. Because that was the one thing that stopped me when I tried to buy Domino's Pizza with Bitcoin back in 2013, is that the service fees were more than like 3 times the pizza. So it just wasn't worth it. Even for the novelty of
Is that why it wasn't worth it? Is that why it wasn't worth buying pizza with Bitcoin in 2015?
Yeah, that was basically
that was the bad trade.
That was a minus EV play. I mean, the pizza itself was a minus EV play, but now, in addition to the fees.
Mids on Twitter talking about how impermanent loss is killing your gains, but they're in favor of buying pizza with Bitcoin in 2015. Couldn't be me.
Fair enough. Well, it wasn't. It couldn't be me either. I looked at it and turned around, but it's a story I can tell my grandchildren. So here's the thing. Obviously Tesla has also talked about, accepting Bitcoin payments. So worth doing. What do you think?
Yeah, why not?
Fair
However,
enough.
you can, if from a business perspective, okay, people want to pay you. Whatever you can do to minimize the amount of friction between somebody giving you money is probably smart. Isn't that like the whole Amazon ethos, right? No customer first, but also just the easier it is to collect money from the customer, the easier it is to go from the landing page to checkout to actually completing the purchase with the smallest amount of buttons and the fewest amount of screens is ideal. So if somebody wants to pay with Bitcoin, just let them pay with Bitcoin. Don't make them cash out first.
Fair enough. I'm trying to think like how you would. I know the logistics of it all. It's just interesting just to, it's about time we have something like this. By far. I guess that even if you had the money, would you still look for financing? Like if they had like crypto financing?
If you've got to finance a car, you can't afford it.
That's fair. That's a fair point. Any
Especially
thoughts,
if it's a Ferrari.
Andrew? Are there a lot of Ferraris out your way, or maybe there will be soon?
Well, I almost feel like I got to respond to what Jangle said about financing a car. I think it depends on where the rates are. The only time I've ever financed a car was when I was 21 years old, and we had 0% interest rates because of it being after the great financial crisis of 2008ish. So based on that, I was able to get car financed for 0%, and if you can get 0%, why would you drain all your liquidity for it? So I think it just depends on the financial constraints of the current environment. Right now, right today, if you were to go buy a used car and finance it, you're just getting screwed so hard.
Yeah.
That I think it depends. Sometimes you're gonna be given free money. It's like taking cash back.
But here's the thing, and I'll make the same argument with cash back. I think that it also stands with cash back, right? Like nobody ever got rich from cash back, and nobody ever got rich from arbitraging the difference between their interest rate on their depreciating car and their investment portfolio, right? Especially when you are taking into account like short-term fluctuations in the market and risk of investment return, right? So yes, even if it's a 0% rate, if you finance a car, you're likely going to buy more car than you would if you paid 100% cash, right? When you pay 100% cash upfront for a car, you don't overspend on that car. You buy what you can afford and what you want to spend and no more, because you're paying all of it right there, right? You sign the check and it leaves your bank account, bye money, right? Do you really need, that 1 year newer model, or can you get a 2-year-old car, right? Things like that I think the mental calculus changes a bit when you are not financing, even at low rates, that cause you to save money. And I mean, maybe the argument could be made of leverage on appreciating assets, income producing assets. Sure, that's a whole different conversation. When you're talking about something that does not make you any money, something that is going to certainly decrease in value over not just the long term, but immediately upon purchase, there is no justification for leverage at all.
I do wonder what the depreciation rate on a Ferrari would be, a brand new 2024 Ferrari.
I would imagine it's like probably 15 to 20% almost immediately.
Yeah.
And then by like 3 years out, I imagine it's somewhere around like 40 to 50%. I imagine by the 5-year mark, it's 50% or more.
Sounds about right. Yeah.
That feels like a psychological argument for financial decisions, though. And this is like why I disagree with the debt snowball.
Mm-hmm.
You shouldn't pay down your smallest debt first. You should pay down the debt with the highest interest rate. It does not matter whether you have fully paid off a piece of debt, as long as you don't require that psychological trick to feel that that you have momentum. That said, there's an argument about whether or not I bought too much car when I was 21 years old because there was zero financing. I don't think I did.
Was it more? Did you spend more on the car than you had liquid in cash plus emergency fund?
Yes.
Then you bought too much car.
Well, then I would have just not had a car at 21. I wouldn't have been able to go to work. So it was kind of a crappy situation.
Should have got a bike.
I mean, I was 15 miles. I was living 15 miles away from.
Dude, you would have been in great shape, dude.
I do hear your argument.
And there's also like in 2009, like you probably could have got a beater for $1,000 or like $2,500, definitely, right? But then if you finance a car at 0%, you end up getting a $5,000, $7,000, $10,000 car for like back then, right? Now a $5,000, $10,000 car might be your beater, but back then, you probably could have gotten one for $2,500. So all I'm saying is that getting leverage on a depreciating asset usually causes you to overspend, even if it's at a really low interest rate. And I think that there is a very strong argument to be made for, because everything about money and finance is psychological. Like, unless you are, maybe 10 basis points of the population, right? 0.1% of the population might truly be absolutely analytical and objective when it comes to their personal finances. But like, I think in reality, almost everybody, if not everybody, is psychologically affected. There's like the wealth effect, right? Is like a commonly cited psychological phenomenon. And it's even referenced like by the Federal Reserve, right? People spend more money during a bull market because their house, they perceive to be worth more, and the paper gains on their stock portfolio and their 401k are higher. Do they actually have more cash? No, but the paper value of their net worth causes them to be more comfortable adjusting their spending habits upward. So is that like a mathematical phenomenon? Maybe, but it's mainly a psychological phenomenon. So I think like it's not a defeatist attitude to say like, I need to manage my psychology of money. It's like a utilitarian attitude. Like, I need to manage my psychology of money because like I'm a human being, and every human being is psychologically affected by their personal finances. So what do I need to do to maximize my chance of success? Maybe it makes mathematical sense to get out a 0% APR loan for a car, but maybe it makes more sense psychologically to pay that off first. Like maybe it makes more sense to pay off your highest interest rate debt first, but maybe it makes more psychological sense to pay off your smallest debt first. So you can stack up the wins, knock out all the loans, but your biggest one, and then tackle that one last. So like, I'm kind of like, I see the argument for both the avalanche and snowball method of paying off debt. And, I don't have any debt, so I'm very thankful for that. But, I do think it's important to acknowledge the psychology of money, especially when you're in crypto and you're having to manage these massive cycles of insane euphoria and like bear market winners, right? If you aren't on a very strong psychological foundation of your money, even if it's not always 100% mathematically optimal, right? Then you're putting yourself in a risky situation. And in my eyes, I don't know.
Any rebuttal, or you want to move on?
I don't have a big rebuttal or anything. I think the thing that has been the biggest like change in personal finances and how I've handled things over the last let's call it 15 years of adulthood and growth is just living way below my means. So like if I'm only spending 15 to 20% of my income on expenses, everything else is mostly going to work itself out as long as I don't make quick large purchases.
Like a Lambo or a Ferrari.
Right, like eating a big a part of the crypto stack into buying a Lambo or a Ferrari. That would be a big bad purchase. Though I'm sure there's some argument that maybe Ferraris are less of a depreciating asset. I don't know. I'm not an expert in expensive cars.
How about Australian mansions?
If you get an old classical one, it might not depreciate much, but if you use it, it probably will still.
I wonder if you bought a brand new Ferrari at the Pico top in 2021 and you bought it in Bitcoin, if you would have done better holding the Ferrari or holding the Bitcoin to today.
Did you drive the car?
A little bit, maybe like on the weekends, but it's in good shape. Like you got a couple thousand miles on it, maybe.
Yeah, that's interesting. There's a service here called Turo, Turo, for anybody who uses Turo. It's like the Airbnb of cars, and there are people who literally buy cars and rent them out as a way to earn back their investment. There are people who buy cars specifically to use for Turo now. So, yeah,
People have been doing that, for a while. It's just now that there's like that. It seems like. Of course, there would be an Airbnb for car rentals. Like that makes a ton of sense, especially like in in Miami or some of these like flex cities, right, where people are, or you want to shoot a music video and you got to have your Lambo, but you don't really got it like that yet. I don't know. My time in crypto has made me have a certain disdain for the flexing. It's kind of gross to me.
Why burn money, right? Don't be burning that fiat.
It's not just the money. It's just gives me the ick.
Well, hopefully something that doesn't give you the ick is that, Grayscale is not going to have their ruling appealed by the SEC. So by the end of this week, I think on Friday, the court's going to rule what the final ruling is about possibly shifting the GBTC current Bitcoin trust into a spot-based ETF, which would be, the first of its kind. Obviously,
front-running all these other applications.
Yeah, no.
That doesn't seem legal for them to front-run all the other applications. Maybe all of them simultaneously. Hey, don't get me wrong. Grayscale has, they've earned it, right? They've earned it. So I don't know.
There's like 16.8 billion or something like that in AUM, something like that. It's a large number. Obviously people trade against this. People have been trying to rather gather in on this GBTC discount. For quite some time. It was as high as 43% back in June, but now it's narrowed down to 16%. on that. So, we've talked about this quite a bit, Jangle, in term with our members about getting into Grayscale. Still a good way to get in, you think?
I don't own GBTC.
I don't know.
I don't think I've ever owned GBTC, but I mean, basically the thesis has been the discount should narrow here. Let me Google GBTC discount, and maybe you can put this chart up on there. Here, I'll link it in our chat as well. I'll throw it in the YouTube chat if anybody wants to copy and paste that in their browser, check it out. But basically, at the top of the bull market, and really not even during the top of the bull market, during the bull market, during 2020, there was a premium on, like, if you go to 3 years or 5 years, there was a premium on GBTC above spot, and that flipped in 2021 to a discount, and then that discount got really steep during 2022, close to 50% at the absolute discount. And that's not its relation from the all-time high dollar price of Bitcoin. That's its relation to Bitcoin itself. So Bitcoin is going down. GBTC is going down against Bitcoin. It is a discount on Bitcoin because the Bitcoin cannot be redeemed and sold to ARB this difference because it's not a spot ETF. So that discount is now shrinking as the market is pricing in an increased probability of the discount going away, right? And there being, redemption. So the thing that's always kept me from actually making this trade is that GBTC collects a 1% expense ratio and on this fund to just hold spot Bitcoin. And the idea of paying somebody 1% to hold Bitcoin for me and then it not even be as good of a product as myself holding spot Bitcoin, just, what can I say? It gives me the ick. So I wouldn't touch this type of product just because I don't like this type of product. If you are, and I'm an investor, right? I'm a long-term investor. If you're a trader, right? My opinion, and my opinion has been for a while, that this discount is going to continue to shrink as the market prices in a higher probability of spot ETFs. So, if you want sort of like if you're very confident on the leveraged or on the Bitcoin spot ETF approvals, and you want a slightly leveraged bet on Bitcoin, then that's GBTC. But I would not view this as a long-term hold just because it's really an inferior product to holding spot Bitcoin yourself in a hardware wallet, in my opinion.
And I mean, even though they didn't appeal the court decision, they can just come up with another reason to decline it.
They can, but it needs to be a real reason, right? And I don't know if they have. But I guess they could make one up. It's not a good look.
Yeah, they can. They could just make one up. Yeah.
Yeah, it has to be one that they haven't already tried to come through in the actual case, which, I mean, from all things I've seen, is going to be very hard for them to do, which is why they didn't appeal. In either case, Grayscale said they are operationally ready to flip the switch at any time if they get approval. So, I mean, do we see a repeat of what happened on Monday if this happens on Friday? Mm-hmm.
Like Jangle said, I find it difficult to believe that Grayscale would be able to go through and activate their Bitcoin ETF with all the other applications still pending. And you mentioned the 1% fee as well. If you're already on chain, obviously just trading it for a different kind of Bitcoin and paying a 1% fee doesn't make a lot of sense. But from an ETF perspective, from asset management perspective, like, they're gonna take some asset management fees. That's just a thing that's gonna happen, right?
Yeah, 1% is just huge. I mean, take like what's like VTSAX, the most popular total stock market fund. What's their, or like that Vanguard fund, their expense ratio is 0.03%. I mean, hell, take a 0.1%. 1% of assets under management, that's crazy. You hold it for 10 years, you're paying 10% of your entire Bitcoin bag just for the privilege of holding Bitcoin for 10 years. That's nuts. That's a nuts fee. That is just, and it's a terrible product. It's a terrible product. Look at its variability. If your goal is to get spot Bitcoin exposure. Like, what the hell? So we need spot ETFs. There's like the fact, honestly, GBTC caused a whole lot of market turmoil. You know, in the crypto markets in 2022 caused a whole lot of instability because there was not a, you know, ability to convert it into a spot ETF. And it has caused a lot of unnecessary volatility and instability in on the balance sheets of, you know, lenders and you know, Alameda and Three Arrows Capital and Celsius and Voyager, right? All of them were kind of caught up in this leveraged GBTC trade. And when that discount went so bad, you know, it contributed to a lot of insolvency. Now, I'm not saying all those entities probably shouldn't have been or wouldn't have been insolvent otherwise, but it just goes to show that, you know, having something like this product available and not having a spot ETF makes absolutely no sense because this is just an objectively inferior product. So come on, SEC, let's go.
How about MicroStrategy? Better play?
I mean, yeah, it's a little. It's not as much like a one-to-one, right? They've got some leverage. They've got like another, you know, technology services business. So that's a whole can of worms. But at this point, yes, it does trade like a bit of a leveraged Bitcoin trust. So
hold up. Does MicroStrategies actually have another business at this point? Do they actually have a business other than holding Bitcoin?
I mean, they do. Yes, they do.
What percentage?
I don't know. I would say they make like I think so. Dude, I'm gonna get this wrong. I think somewhere around $100 million a quarter or something.
Huh. All right.
I think
All right.
I remember
Sorry, carry on.
you swapped a lot of your MicroStrategy for coin, right?
Yeah.
About 6
At
months
this
ago?
point, I hold very little MicroStrategy. No, much more recently than 6 months ago. But yeah, my exposure of choice in the equities markets for crypto is Coinbase. I like it. You know, below a $15 billion market cap, I think Coinbase is kind of a steal. Not financial advice, right? Not financial advice.
Not financial advice, do your own research. But what is advice is to hit that like button. Please do. And also, if you could, comment. Tell us how we're doing. Tell me what you're going to buy with your first big crypto purchase. I want to know. Is it going to be a Ferrari? Is it a Lambo?
It's just ETH.
Just ETH? A gold-plated hat or something like that? Something that seems good to you. Well, one thing that we were talking about earlier, you know, before we came on, is just the fact that, you know, looking at all the markets right now, on-chain finance lending rates are normalizing, seemingly at parity with rates in the TradFi world. Janko,
I wouldn't say parity.
you...
I wouldn't say parity, but yeah. So a few weeks ago, I had brought up that that Aave lending rates, you could borrow against like your ETH or your staked ETH on Aave for below the federal funds rate. And that is no longer the case. Borrow rates on USDC and Tether around 5.5%. Tether borrow. Is this on? Why is the Tether borrow rate so high? What the heck? Anyway, that wasn't the case this morning. Maybe there was a big Tether loan that got taken out.
That's expensive.
Yeah, no, that's crazy. Maybe Justin Sun knows something, or was it Sifu knows something? What was that meme that was on Twitter for a little while?
USDC there has about the same supply to borrow ratio at 5%. So
well, it's got way more supply. So, but you're right. It's probably a similar ratio. Yeah.
Almost looks a little higher even, but
yeah, Tether is, I think, isolated, I believe. But anyway, you can still borrow Go at 2.5%. But anyway, you know, I'm not actually leveraging in these lending markets, right? I'm not borrowing stable coins. But I think it's a good sign for the normalcy of the market for, you know, you to not be getting better rates than what the government lends money at to borrow on chain, right? So by just depositing USDC or Tether and Aave, you can collect close to the federal funds rate, and by borrowing against your ETH or your staked ETH collateral, you can get close to the federal funds rate as well. So I mean, still obviously, if you're going to take out leverage to buy a car, then probably better to do it against your staked ETH collateral and pay that off than to get a traditional car loan, right? And if you've got a lot of ETH and you're carrying and you buy a house and you're quoted at 7.5%, 8% mortgage, whatever they are these days, then it's probably better just to collateralize your ETH on a lending market or maybe something like Liquidity, and have your mortgage be on chain, pay it off on there, and not carry the more expensive debt in the traditional markets, right?
I mean, you're technically being paid to borrow if you deposit Tether and borrow USDC.
That's true. There is a little looping strategy there, but these are all variable rates as well.
Of course.
So, I mean, I wouldn't, if you're, if you were to do that strategy that I just said, where you're, you can get a fixed rate mortgage, right? And I think you can lock in fixed rates on some money markets or lending markets on chain, but if the bull market comes, a huge demand for leverage comes, and you can see that variable rate balloon. And then if you don't have the liquidity to pay that off, then you could be stuck in a really bad situation. So obviously, not financial advice. You should know what you're doing before you take out variable interest rate loans, for sure.
Agreed. Any thoughts, guys? Gabe, Andrew?
No, it's interesting to look at the rates and seeing it normalize and trend towards the federal funds rate as well. It's not super exciting in terms of yields, but yeah.
I think it feels like things are waking up a little bit. That's what it feels like.
That is what it feels like.
It feels like rates are being responsive instead of just bored and sad.
Yeah.
And I don't really have any thoughts particularly on the rates, except it feels like things are waking up, things are moving, and that feels like a good thing for DeFi.
I agree.
I'm looking more towards ARB for my yields right now with the incentives going on there, which is starting up now.
We're gonna talk.
Yeah, they got that juice. They got that juice.
Tell me about the juice.
Riz. They got that Riz.
Chris, where'd you learn that word?
Stop it.
Dude, I didn't learn that word until like a week or two ago. How'd you learn that word already?
I got my ear to the streets, Jangle.
Okay, all right.
Don't you worry, youngin.
L boomer.
I am apparently way out of the demographic for most people. I learned a new word recently called glizzy, and
that's a classic. That's a classic.
Yeah, well, apparently it's a new word. But in any case,
you a glizzy gobbler?
Nope, we're not going to go there. If you oh, goodness. Just a quick bit of housekeeping. If you're enjoying what you're seeing again, please like, subscribe, grab notifications, leave a comment. We'd greatly appreciate
dislike.
it.
You can dislike as well.
You sure? Of course. You can certainly dislike. You have the freedom to do so. We are moving this call, by the way, moving forward to 1 p.m. Eastern. So we're pushing it 1 hour back, starting next Wednesday. So keep that in mind. I'll also make that announcement at the end of what we're doing today as well. If you are in California, not sure how you feel about this, but Governor Gavin Newsom, former mayor of San Francisco, now governor.
I haven't heard this news yet. Is it? Is it going to be bad?
It's not bad. I mean, they're following New York's bit license bill, basically. So
that's terrible. That's the worst thing you could have said. That's
fair enough.
I mean, it's California. What did you expect? You expected good news out of California?
I was holding out a little bit of hope, but I guess that was foolish.
Well, so here's the thing. It goes into effect July 1st, 2025. It's going to require any digital asset firms in the state of California or rather conduct business in the state of California, to register for a license to operate, wrapping these these companies in a warm little regulation blanket.
Smothering,
as,
one would say.
Exactly. It's known as the Digital Financial Assets Law. It's been in legislation for quite some time. So interesting that I guess maybe he's thinking he's more of a trailblazer in this case. Governor
Blazing
Newsom to do
something,
so.
that's for sure.
So I'm curious to see how, large crypto communities, obviously Los Angeles, hotbed for crypto founders, San Francisco, of course, and of course Silicon Valley. Silicon Valley is going to be a very interesting spot. There are a lot of fiat. Well, there's a lot of fiat off ramps. Not a lot, but several that are based out of Silicon Valley. So
I feel like there's NFT people in LA, but outside of that, I don't know. I think, it just doesn't seem like Silicon Valley is really where crypto devs are itching to be, right? I feel like the ethos in crypto is like Silicon Valley is it's so Web 2, right? Like that's I feel like that's the vibe I get, right? Like most people who are seriously building in crypto in the US, I think by and large they're in New York, Miami as well, like maybe Denver for ETH people and Austin, but like not necessarily California, and certainly not California after July of 2025. But also like a lot of it's happening outside of the US at this point, right? Like a lot of people are really excited about Southeast Asia and Singapore and Malaysia. So yeah, I think that if the US or specifically California is like not too careful, they might not be the monopoly on tech innovation.
And I think that's the problem. I think with the passing of this bill, there's stronger than ever pressure within Capitol Hill to pass crypto regulation legislation, of course, led by, Patrick McHenry and those in the blockchain caucus. They're against, just Elizabeth Warren in the Senate. Then her people who are on her brand of messaging about how they feel about crypto. So there's going to hopefully be some sort of regulation coming soon to help combat this. Or, you're right. I mean, all the really cool innovation out there, not available to U.S. residents. They say it on their website. Even some of this new stuff on T-bills, like real world assets, none of it is allowable through U.S. Residents.
I got a great article that references that coming out pretty soon. So
I don't know if this is a good thing. I feel like this actually might be a good thing for crypto, but I don't think we're seeing any regulatory clarity out of Congress anytime soon. We still don't have a speaker. And there's another war breaking out. Pretty bad one. So I kind of don't think that crypto regulation and frameworks are going to be a priority here over the rest of 2023. I really don't.
No, they're kicking the can for debt for government spending to what, the 15th of November?
So they've punted. Oh, you're talking about the budget? I mean, does it really matter if they have unlimited money until 2025?
True, but they're going to, obviously, where they punted from 2 weeks ago, they're going to be continuing on down the road to try and get that taken care of, I guess, before they adjourn for the rest of the year. But yeah, no, I think you're right, Andrew. It's going to be very interesting to see where they land on this, if at all, this year.
I don't think they're going to land anywhere.
Every day they delay clarifying these things. They're pushing devs and innovation outside of the US. They may not see it as a problem now, but I think it certainly will be.
Maybe they're waiting because they're waiting. I mean, obviously, the ETF futures have not done very well, as we talked about, 2 weeks ago. PayPal USD is not catching fire. as a legitimate stablecoin payment rail. I know
Yeah,
that's shocking.
it'll-
That's shocking to Jangle.
It'll get there. Maybe it'll get there. Don't fund them too hard.
No, but at the same time, these are the things that are that we're supposed to like really just go off and running, so people would start, going to these digital assets and then bringing that need for legislation to the forefront. I guess we'll see as they start to get hotter, if that turns up the fire on the legislative branch.
I don't think they're feeling any political pressure. They don't care about us at all.
It's a lot easier to push the innovation out than it is to get it back if you start trying later on.
That's true.
I mean, hey, you're preaching to the choir here. I just don't. I agree with Andrew. I don't think it's happening. I don't think it's a priority, especially after all this global conflict. I just
don't
see him getting anything across the finish line before next administration.
They need enough voters to care about it before it becomes a big issue for them.
Yeah, I agree. So moving back into the world of DeFi, we have
real quick important differentiator there. I do think there's a high probability for a Bitcoin spot ETF approval by Q1 2024.
Yes.
End of this year, beginning of next year. I do think that it's a high probability. That doesn't require an act of Congress. That just requires the SEC to stop being so lame.
Stop being whack. Gain some riz. I know I'm using that wrong.
Stop it. Stop it, Chris.
Then it'll be bussing. Bitcoin will be litty.
For real, for real?
On God, bro. All right, I'll stop. Back to DeFi. So Uniswap has already started. They're going to be charging fees to swap assets on both the front end website, meaning at uniswap.org, or in their Uniswap wallet, which is available. I think it's now available on Android, but it was definitely available on iOS. They were doing it in beta at Denver. I got
wait. What? Chris, dude, that's crazy. So Uni token holders are finally going to get a yield?
Nope. That is wrong.
Dude.
I know, right?
Jabated.
Sorry. You got debated, Uni tokens. For anyone who's a Uni staker, you got debated.
Bag holders.
Yeah.
We told you.
Ultimately, this is to
We tried to warn you. Now you're done. Now you're
This is true. Jangle did try and warn you all. As a total governance token, it's just going to remain that way. Something like it. I would say it's as good as holding Spell at this point. I'm kidding.
Hey, at least Spell it had some value capture. Right? I mean, granted, that was Uniswap is a really awesome. Outside of Tether on Tron, Uniswap might be the best product market fit we've found from a crypto product ever. But that was kind of a joke, but also kind of true, and it makes me sad. I think this really highlights the difference between equity and token holders, right? Like token holders have been holding out for the potential to get some sort of value accrual through the turning on of the fee switch. And for years, they've been basically used for funding, for liquidity, for funding research, for giving grants, for yada, yada, yada. Like all this has been at the expense of the token holders. New tokens coming online, being sold for fiat so that you could have new devs, new initiatives, new grants, etc. And this whole time, these uni holders have been, bearing the brunt of the dilution. And they've been getting nothing in return, right? Nothing in return, holding out hope for one day, if there is a fee switch to be turned on, that they would, be minting lots of money, right? They'd be getting lots of money. But the argument was always, oh, well, we can't turn on the fee switch because, you know, then there's going to be another protocol that forks us and they're not going to have the fee switch, and then we'll lose market share. So that's why, you know, we can't turn on the fee switch right now. Everybody knows you turn on the fee switch, you give it to holders, like, you know, you're probably going to get Genslered. You might be in the eyes of the securities regulators, et cetera. But now we have the fee switch, not the fee switch, but a fee switch finally being turned on for select pairs like USDC, ETH, you know, wrapped ETH, LUSD, WBTC, you know, some others. So when you're trading on the front end between these pairs, there's a 0.15% fee, and that is going to the foundation, right? The Uniswap Labs.
Yeah, for marketing operations, basically to help them continuously to have a sustainable business model. That's basically what it is, right? So let's kind of go over exactly what those the rules are here. If you're using the wallet, which is the app on iOS or Android, you're going to be paying that. If you swap between any of these assets, so there are some caveats here. So let's go through them. Fees are only collected on swaps where both the input and the output tokens are subject to fees. So if you're going ETH to USDC, ETH to USDT, ETH to DAI, BTC to ETH, that type of thing, you will pay that 0.15% if you are using either the wallet app or if you're on uniswap.org using the swap. So if you're using like DeFi Llama Swap, if you're using, I don't know, another aggregator, 1inch or Matcha or something, you won't pay that. So it's only if you're using the website. Swaps from one stable to another, so between USDC and USDT or USDC and DAI, no charge. That's staying the same. Also, if you're going to be wrapping, so ETH to wrapped ETH and unwrapping wrapped ETH to ETH, also free from these fees. So, and then interestingly enough, it's only through Uniswap interfaces on mainnet as well as supported L2s. So that makes sense. I mean, we don't have any other way to access Uniswap than Onchain Finance or DeFi. So that's pretty much it. So yeah.
Importantly, if you're using an aggregator, you are not subject to these fees.
Yes.
Right. So just use 1inch or any of the major aggregators and you're chilling. But I think the main takeaway from this is token holders and there is no fiduciary responsibility to token holders. There is currently no regulatory framework for creating a capital structure that revolves around a token, right? That has, any fiduciary obligation. So like, if there is not programmatic value accrual to a particular token, then you are most likely exit liquidity, right? Like, right. I mean, and perhaps there is a significant overlap between Uniswap Labs equity holders and Uni token holders, but I know there are a lot of retail Uni token holders who do not have equity in Uniswap Labs, and they are just getting smoked. They're just getting smoked. And this fee switch being allocated towards Uniswap Labs honestly probably reduces the probability of the real fee switch to Uni token holders ever being turned on, to be honest.
I think we'll see when we get to V4. There might still be a little bit of hope.
Well, I'll consider buying it when they add it.
That's true. That's a good point. In the show notes, we'll have, for anybody who's curious, you can read Hayden Adams' actual full tweet along with a link to this what the labs fees are going to be if this affects you. Hopefully this continues to sustain. Uniswap, obviously, huge innovator in the space, very Lindy protocol. 1,000,001 dexes are forked off of Uniswap's code. So, they got to do what they got to do.
Yeah, code's great. Token sucks. Also, if the fee switch were to ever be turned on, which is a parameter also in V4, so V2, V3, and V4, then that fee would not be an additional fee. It would be taken from LPs. So it would cut into LP profits or returns. And that would be what goes to token holders, whereas this is an additional fee tacked on top for using the front end. So,
yeah, and that it sounds like a bad idea, right? it sounds like a better idea to incentivize the people providing the liquidity, so incentivizing the LPs with the full fees that they can, rather than splitting that up and trying to delegate parts of it to the Uniswap token itself, which doesn't add any intrinsic value to the protocol. It doesn't bring anything to the table.
That's true. Like realistically, the way I see it, you're correct. There's no reason for the Uni token to exist outside of governance. If the Uni token is going to take accrue fees, then it only makes the Uniswap protocol a juicy target to just be forked and vampired. By adding this fee on the front end, they're at least not detracting from LP profit. Yes, it's costing traders a bit more, but traders who realize this can just use an aggregator and avoid this fee. So the everyday, low, I guess you call them dumb money. I hate using that term, but like the people who are just swapping on the Uniswap front end without knowing any better are going to not even notice this fee. And they're going to pay it, and that's going to go to Uniswap Labs. And the people who are sophisticated DeFi users who are going to shop for the best rates on swaps, like they're just going to use an aggregator anyway, and so they're not going to be affected by this fee. So it's going to effectively generate some, all the upside without any of the downside. Except the key component is this is not going to Uni token holders; it's going to Uni equity holders, is going to Uniswap Labs. And so like, why, unless you just, maybe you're, financially independent and you just enjoy participating in Uniswap governance, then hey, buy some Uni, right? But like, if not, if you are if you are a profit maxi and you're trying to, hold strong assets and you want to invest, right, then holy cow, like Uni just has no value proposition from a token holder or investor perspective, right? I mean, especially after this, like this is just, I'm looking at a screenshot of the tweet superimposed on top of the chart of Uni, and it just took a decent 10-15% dip right after this right after the Hayden Adams tweet. It's just tough, it's
They
just
sold the news, brother.
It's just tough to be a Uni token holder. I'm so sorry.
I agree, but would you say the same for an ARB token holder?
Probably, unfortunately, at this time, yeah.
Okay, fair enough. I wish there was a better way to show this tweet. Hold on, let me. Oh, okay. Well, let's go. Okay. So, thanks to Deluxe for this. I'll put the tweet here for anyone who wants to follow along. We so after the ARB short-term incentive protocol, the STIMI, 29 protocols made it to quorum and were able to get pretty much what they asked for. So essentially, the number of you who did not claim your ARB airdrop actively funded this this round of STIPs. So thanks to you guys. The 29 different programs are very thankful for you for that.
I'm guessing everyone here did claim their airdrops, but or at least hopefully they did.
I did, for sure. Faux show, I did. And unfortunately, we're going to all have to pay taxes on that. Thanks, IRS. So let's talk about some of the big ones. This tweet has a list of every single winner, mostly, I believe. And then also, you know what? I'll help out Deluxe here. There you go. There you go. There you go. There you go, sir.
I think technically you should have already paid taxes on it if you're paying quarterly estimates.
You're right. GMX, largest specific protocol that asked for 12 million in ARB. They got it. 5.1 million. So they're pretty much splitting it between the LP and the trader side. So incentives going to traders using the perp dex. For the vault backers, enabling the services, they're going to get 5.1 million in liquidity incentives, and then integrations themselves will be getting 1.7 million for over 4 months. So that'll be a nice boon, I think, for business.
And that's all V2. Is that all V2? Or
that I don't know. We'll probably have to check with GMX exactly how they're going to specifically denote that, but this is just based on the research that we've talked about. Again, we've been talking about this for multiple weeks now. So Mux, also a V1, V2 aggregator for GMX. They're increasing fee rebates as well as finding ways to make trades cheaper. So that's a 4-month program for them. So if you haven't used Mux, and again, that's like the one good thing too. So if you're watching this looking for alpha, if you don't go too much onto Arbitrum, this is a real good time to do so. They have the Arbitrum Odyssey going on to try and highlight different projects and protocols on the blockchain. And with all of these incentives, good time to get extended yield for sure. One of the largest dexes now on Arbitrum Camelot, also getting more than 3 million. Most of that's going to partner pools, which is interesting. So they're in a way kind of they're not a Velodrome fork, but they have a VE33 type of model. So for this to go back to partner pools, increase that flywheel, good stuff for them. That's a 3-month program for them. Vertex, which is an options protocol, 3 million, 3 months. Radiant Capital, they just went live on ETH mainnet on Sunday. Friends of the show, 2.85 million ARB. Looks like they're going to be dropping some to DLP lockers. So good for them. And then just specific incentives with both GMX and Camelot and Dopex.
Okay, so for Radiant, all of it's going to DLP locks and increment
most
and
of it, yeah, most of it.
Is that retroactive if you're currently locking DLP, or do you have to lock it again?
Based on things they've done in the past, most likely it'll be a new thing to keep incentivizing new locks. Yep. I would assume the same, because they did that with the airdrop, right? Yeah, because people have locked previously, they've already locked. Like, there's not much they can do about it.
Mm-hmm. Jones DAO, Vault and Optimizer on ARB, 3.5 months, 2 million ARB. Most of it going to the JGLP and JUSDC derivative vaults. Something that Andrew's covered quite a bit on his Thursday calls. Along with, I guess there's one for Aura, which is a balancer optimizer. Trader Joe. Yeah, Trader Joe getting 1.5 million in ARB. Mainly going to market making and a big chunk to auto pools. Thank goodness, because those were not that great. 3 months for them. So we're talking to the end of the year for a lot of these protocols. End of the year, you're going to get some extended yields. So this could be a nice little comfy season for Arbitrum farmers. Dopex, another options protocol, 1.5 million, mostly going to, looks like RDPX staking and some other LPers, looks like here. Interesting.
I think the one of the interesting things to see here is that the on-chain perpetual futures trading narrative is pretty strong on Arbitrum. I think close to 50%, if not over 50% of these incentives actually went to perpetual futures platform.
Yeah, I think the actual number was 44%, but yeah, you're right. It's a large narrative for perp dexes. So GMX and those like it got a pretty decent chunk in there. Magpie got a pretty decent chunk for all their sub DAOs. So that would be RadPi, PenPi, CamPi, Magpie. So specifically, strength in numbers, not needing to be exposed to, specific pools to get in on the action, because your money goes straight into buying that for them. Looks like Balancer got a decent one. Socket.tech. So Socket is the only one that is not a perp dex or a yield generator. They're a bridge. So what's interesting is that they actually are, I guess they're going to build more stuff because they actually bridge between Arbitrum Orbit and just regular Arbitrum 1. I don't know if they maybe bridged Arbitrum Nova, which is their gaming and an NFT chain. But yeah, just looking at some of these, obviously some of them have some decent incentives. Let's see if there's anything that really I remember there was one in particular that caught my eye. Oh, Gamma Strategies is one too. Lodestar Finance, a big lending arm. They're going to be giving that in depositors and borrowers, which that means looping strategy is going to be fun at Lodestar for the rest of the year, most likely because they're going to incentivize you to supply and borrow. Gamma is doing 250K monthly. So LPers of qualified Gamma vaults. These are automated concentrated liquidity vaults on 6 chains with about 12 different providers, you'll get an extra incentive of about 250K for the next 3 months. So that's warm up the Davos vault, boys. We'll see what happens. Umami, maybe one day we'll come out with a decent delta neutral vault with USDC. We'll see.
Yeah, there's a lot of lower allocations there as well.
Mhm.
I think Chris linked the tweet if anyone wants to go digging through all the lower allocations one as well. But yeah, I think GMX got the biggest one. It'll be interesting to see what the yields on V2 actually go to with these incentives. So I'm looking forward to seeing that.
Yeah. So I guess the oh, Andrew left. The takes is specifically, do you guys think that this will be something that you target with your own personal allocations for the rest of the year?
I'm already deployed in some of these protocols, so
As am I.
Yeah.
Anything in particular, Jangle, that kind of caught your eye? Obviously, GMX is on the top of the list for most of us, but
yeah, that's really it. What were the what were the other major ones? I mean, Frax had one, so maybe I'll hold
Frax had one.
SFRX ETH, but it's just too much of a black box for me, to be honest. So maybe not. Is there? I mean, I right now I have some RDNT that's vesting, so I might lock that into DLP instead of selling it if the yields are high enough. But that's probably it.
Yeah, for me, I mean, I'm a fan of Magpie, so I'll look at some of those. The other one that kind of caught my eye was most likely going to be the Gamma, and I do have some stuff in Camelot, so I do have some skin in the game there. So I'm curious to see how that goes. But again, that's just round 1. There is a round 2 that started for proposals on October 12th, right after round 1 finished. So yeah, we're going to see even more proposals come through and more probably a continuation of the season into Q1 next year. So yeah, good stuff. So excited to see where we go there.
Dave mentioned in chat as well for Radiant, they have changed it for the mainnet launch to the week of October 15th. So we're expecting to see that launch on mainnet this week, assuming that goes as planned.
Wait, didn't they go on Sunday?
No, it's the week of October 15th, so it's this week.
Oh,
it's not deployed yet.
My fault. I thought they already went on Sunday. Well, here we go. Hopefully we'll see more. I mean, obviously this has a little bit of a factor into it, so hopefully we I mean, technically not because it's on Arbitrum, not ETH mainnet, but hopefully we get to see them live on mainnet sometime this week. Well, gents, that's all that I had for you guys today. Any other thoughts before we get going?
Don't forget to like and subscribe.
Yeah, like and subscribe. We're moving
week.
again. We're pushing back 1 hour to 1 p.m. Eastern, moving forward starting next week, which will be done from Miami. We're going to be in Miami for ETH Miami next week. If you're going to be there at ETH Miami, let us know. I'd love to, say hello, meet you in person. Always good to put faces with names. So, yeah, make sure you like and subscribe. And again, hello to everybody who's watching us on Facebook Live. That's a new thing starting this week. Jangle, anything you want to plug before we go, sir?
That's it. Make sure if you're on Twitch or on Facebook, check us out on YouTube at Beacon DeFi, and make sure you subscribe, like, and we'll see you here next week at 1 p.m. Eastern.
Live from Miami.
Wednesday.
Live from Miami. It's going to be great. All 4 of us in Miami. Sounds good. Everyone have a great Wednesday. We'll see you later. 07. We're out.